What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about SOFI, Palantir, NIO, Square, Shopify, TWLO, and Datadog. So I will be doing a complete technical analysis on these companies. This is a little bit of a different video than the Magnificent Seven and FANG stocks that we do already over the weekends. But this is going to be more towards the speculative side of stocks that we are going to analyze. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. I really appreciate your guys' support, and make sure that you subscribe to the channel if you haven't already. We talk about fundamental analysis, technical analysis, options, macroeconomics, and everything's going to be covered. And also do check out the links down below for our Discord, for our Patreon. We'd love to have you on board as a MoneyVest member. And of course, you do get access to all the members only videos, Excel spreadsheets, and our Discord channels, 20 plus channels, including trade alerts, trade ideas, everything's going to be included. And there is a 16% annual discount that's available till the end of this month. So another 3 more days, and you do get access to everything for an additional 16% annual discount. And also make sure to follow me on Instagram as well. The handle is going to be CASWRP. And again, I do post a lot of interesting stories related to portfolios, P&Ls, different strategies, tips. I will be posting a lot of personal finance videos on Instagram as well. So definitely do check that out. And these are going to be like vertical videos and reels and shorts and whatnot. So links going to be down below. We'd love to have you on board. Definitely do check that out. So when it comes to SOFI, let's start with SOFI. SOFI obviously has been on a roller coaster ride, right? So this right here, lots of consolidation sideways, broke down pretty aggressively over here. Since then, it was just been consolidating sideways here. It's definitely have a very strong rally here of over 100%. But more recently, you'll notice that we kind of tapped out at this level at just over $11, $12 per share. And since then, we have just been selling off inside this downtrending channel of lower highs and lower lows. Basically, this right here is the downtrending channel within which SOFI has been trading. So if you zoom in a little bit, what you'll notice for SOFI is a consistent downtrend inside this downtrending channel. And right now, we're kind of sitting at a very nice support, right? So we're towards that lower high, that lower low, and that very nice horizontal support inside this green rectangle, sitting at just under $7 per share. And the support obviously is going to be at $6.51 for the stock. So there is potential for us to see maybe a little bit of that upside back up to that resistance of $7.91, close to $8 per share. That's going to be that lower high inside this downtrending channel, as we have already seen, consistency here in this lower high and lower low pattern. Now, just because it's happened in the past doesn't mean it's going to happen again, but the risk reward is what we are here to analyze. And that's pretty good considering that this right here is a very strong support and a target and a resistance all the way up to this level. So this right here is the reward with the potential risk of breaking below 650s for us to maybe see some more downside. If you do see a breakdown, then of course, next support is going to stay put down to low $4. That's going to be the level to watch also for SOFI. And again, SOFI is not profitable yet, as we know, and the company needs to turn the corner towards profitability. So this is not a fundamental analysis on this company, but as you guys already know, that I'm slowly and steadily kind of taking a very, very, very small position, and will slowly and steadily kind of build my confidence in the stock as I get more and more convinced that this is really the future of fintech. But right now, from a technical analysis standpoint, there is good risk reward opportunity on the long side, but we also have to understand that we are trading against the trend, which is the overall trend is obviously very much towards the downside, which is lower highs and lower lows. Now, going over to Palantir, Palantir has definitely been one of the best performing stocks of 2023. Lots of consolidation sideways here. Went through a very similar process as SOFI, where it broke down during all the quantitative tightening measures taken by the Fed. Interest rates going higher, the economy going through a very tough time in 2022. The entire market was going through a very rough time. There was a bear market, and of course, we saw Palantir kind of settle in at around sub $6. Lots of consolidation, and then just a massive rally over here, as you can see, for Palantir as well. So that's really where we are at the moment. And right now we are obviously consolidating sideways in that range. So this right here is the overall consolidation for Palantir, with a very strong resistance here, sitting roughly at just over $19 per share. So this right here. So lots of consolidation right now inside that range. And really what we need to watch for a resistance right now is going to be $19, $20. You can see that last week was Palantir's already red week. It was down, I think, a little bit over 6%. And this right here is the entire gap that it may come down to fill back in, and sub $14. So this right here is going to be that level to watch for Palantir. So you can see that on the daily time frame, this right here was the head and shoulders. It didn't quite break down below the neckline. Instead, obviously it rallied quite well, pulled right back down. Then it had a huge breakout after the earnings. RSI is now starting to show signs of some pullback. And of course, MACD also almost crossing below that signal line. If it does break down, there is possibility for Palantir to maybe come down to 18 or maybe even sub $18, come down to $13.75, $14, considering the valuation is extremely high for Palantir, and this right here is the gap that it may come down to fill in as well. Now, before we get any further, make sure that you drop a like, and also do check out the courses down below. We've got the Cyber Monday sale today. Literally today is Cyber Monday, and the full 4-course bundle is 70% off, and this sale does expire tonight. So if you've ever wanted to enroll for fundamental analysis, technical analysis, psychology, and options trading, the entire bundle, all 4 courses, lifetime access, 70% off. The coupon code is going to be Cyber Monday as well. So definitely do check that out. And TradingView is also having their 70% off sale. Link's going to be down below. Definitely check them out as well. I've been using that software for well over 5 to 6 years. Never had any complaints. They're one of the best ones out there for technical analysis, for charting software if you're looking for one. So this is literally all TradingView. Now moving over to NIO. And NIO also has been one of the worst performing stocks of 2023. In fact, of pretty much for a very long time. This right here is the downtrending channel of consistent lower highs and lower lows, and this right here was the breakout to the upside that we saw. And of course, we're coming up to that lower high. We got rejected, and then we sold right back down. So this right here is pretty much the sell-off once again, and NIO right now is trading at very, very rough waters. Pretty much this is a support. So this right here is a support that needs to get held up. Like this is literally needs to be held up pretty well. If we do break down below the support, then it's possible that NIO continues to deteriorate in valuation. Of course, sub $7 will not be great. So right now, what we are seeing for NIO is a little bit of that positive divergence, because even though it is continuing to trade in this downtrending channel, there is a little bit of that higher high and higher low pattern forming on the RSI. So maybe there's potential for NIO to kind of bounce back higher from these levels, back up to $9.43 to possibly up to $10, $11 per share. But we're gonna have to wait and see if that actually happens. But right now, for NIO, it doesn't look super great because it's just been selling off quite consistently, and it's trading literally at a support right now. Now, when it comes to Square, lots of consolidation here before the pandemic. Of course, a huge sell-off, then a massive rally on the back of this quantitative easing. Got tapped out at $290, close to $300 per share. Then a massive sell-off in the entire fintech sector. Lots of consolidation sideways in that range, and then a breakdown below this level as well for Square. So Square's been under a lot of pressure, of course, and since then it has obviously recovered quite well. PayPal has not recovered, but Square somewhat has, so it has seen a very nice rally back higher, but the next resistance and target is going to be at 89, close to $90. So this right here is going to be that level to watch for Square. That's exactly where we have previously gone rejected multiple times, so $83 to $89. And of course, right now we are seeing a very nice recovery back up, and support level is going to stay put at 50, close to $51 per share for Square. One more thing I want to mention is that the RSI and the MACD is quite overbought. So you can see the RSI and the MACD over here, quite overextended on the upside. And this is going to be that next target level to watch. But before we get there, I wouldn't be surprised if Square actually comes down, revalidates $50 before making that move higher, back up to over $83 per share for Square. Now, going over to Shopify. Shopify, you'll notice, is again was trading in a very nice higher high, higher low pattern. This right here was a little bit of a downtrending channel of lower highs and lower lows. But more recently, though, it has broken out very nicely. Not only is it making a new higher high, because we're going higher than the previous high for Shopify, but it's also coming up to this resistance, which is going to be $77 per share. So that right there is going to be that's going to be consistent with the previous level at $77, and that is going to be the level to pay attention to. And not to mention the RSI and the MACD also quite overbought for Shopify. So the higher we can go at $77, the higher the probability that there is potential downside from a risk-reward perspective, considering how overextended, overbought we are starting to get for Shopify. So let's just go over to TWLO now. And TWLO, you'll notice, is seeing a lot of consolidation inside a symmetrical triangle. And TWLO has also gone through a massive sell-off over here from highs of 457, 460. We have seen a pretty sizable decline, and now we're just seeing a lot of consolidation for Shopify just inside this symmetrical triangle. So lower highs and the higher lows over here. So 79, close to $80 is going to be that level. And of course, another resistance to watch with a support level at close to $40 in case we continue to coil into this channel. Then we're going to have to wait and see whether it breaks down or whether it breaks out. So those right there are going to be some levels to watch, because with symmetrical triangles, it's a little bit difficult to understand whether we're going to see a breakout or a breakdown for any stock, right? So we're gonna have to wait and see. However, the pattern overall has been to the downside, so I wouldn't be surprised if we do see a bit of a breakdown and come back down to $40, which again, TWLO, for example, is going to be a very, very good deal from a net liquidation value standpoint. I've taken a trade on TWLO before, and I've absolutely loved trading this stock in the past. Again, this right here is the symmetrical triangle. Resistance up to 69, close to $70, so as much as $79 to $80 per share. And of course, support level is going to stay put at 40 bucks at the moment. Now, when it comes to Datadog, finally, this right here was a little bit of a head and shoulders pattern formation. This is going to be the massive neckline sitting roughly at $62, $63 per share. And right now, we are coming up to that resistance for Datadog as well. It's going to be sitting roughly at $117 per share for the stock. It's been rejected here multiple times. A couple times you can see that it's already been rejected at those levels. And not to mention the RSI and the MACD also very, very overbought at the moment. And this right here, again, is going to be that resistance at $117 per share for the company as well. So hope you guys enjoyed this video and a complete technical update on all these companies put together. Make sure that you drop a like. Don't forget to subscribe to the channel. And also don't forget to join our MoneyVest community. Cyber Monday sale, 70% off for TradingView, 70% off for fundamental, technicals, options, and psychology course bundle. So you get over 120 plus lectures, 30 plus hours of content, lifetime access, and also do connect with me on Instagram if you want to get access to a lot of other informations, tips, strategies, and reels and shorts. I will be posting a lot of content on Instagram as well. The handle is going to be CASWRP. As always, happy investing. I'll see you all in the next video.